Hi everyone, very warm welcome to today's session. My name is Ricky Sundrani. I'm a partner with the pricing assurance team. Everest leads some of our work in the area of price and solution benchmarking for cloud services. Today, we'll talk a bit more about the pricing outlook for the rest of the year for 2024. And before we get started, would love to know more in terms of where is the audience joining us from today. I have logged in from London where we're still waiting for the summer to arrive, unfortunately, but I'm hopeful. Um, I have a couple of my colleagues, very talented colleagues, who will be participating and co-leading this session today with me.
Yeah,
Arpit, why don't you introduce yourself and
sure.
then Naman as well?
Thanks, Ricky. So my name is Arpit Jhaver. I am practice director with Everest Group, part of pricing assurance team, and primarily looking at BPO as a sector, wherein we provide the pricing benchmarks and solution reviews for BPO related areas. Aman, over to you if you could introduce yourself.
Thanks, Arpit. Hi, everyone. This is Amanpreet Machanda. I'm a practice director with the pricing assurance team at Everest Group, and I am aligned to the applications and engineering services cluster. As part of this cluster, I lead some of our areas around pricing, marketing, solution marketing, and contract marketing. Happy to be on the call today. What do you, Ricky?
Thanks, Aman, Arpit. So, as I said earlier today, we're going to talk a bit more about the pricing outlook, especially on IT and BPO services in terms of what lies ahead of us for 2024 and what we've seen happen over the last 6 months. But before we get there, kind of just trying to share some more context in terms of what we are seeing in the market. So, um, we at Everest Group kind of are, I mean, there are some conversations that we definitely see light at the end of the tunnel and anticipate that the IT BPS services market will pick up growth in the second half of the next 12 months. And multiple levers which point to some of that happening, such as things such as what has happened is ramp up of large deals which were signed in 2023. We're starting to see early shoots of recovery in the banking sector in North America, which is a major growth engine or sort of the cash cow for a lot of service provider firms. We see some strong performance in some of the emerging markets. For instance, the recently released report, the June quarter results from TCS, and one of the big highlights of that earnings was the nearly 60% growth in the Indian domestic market and nearly about 37% growth overall in the emerging markets. So that's pretty strong numbers. And then another highlight, sort of, which was important to look at was the addition of employees after 3 quarters of negative headcount addition. So definitely including indicating some early green shoots. However, I think this would be probably just be half of the picture because as positive as I may sound, definitely deals are facing above normal scrutiny by enterprise clients, which is of course seemingly reflective of a very challenged decision-making environment. I think we're also seeing that insourcing is a major structural headwind for service providers, and discretionary spending pressures do still largely continue. So of course there is pricing pressure being seen in the market. And then I think no conversation these days is complete without Gen AI. So we'll talk a bit more about that. And of course, Gen AI remains to be continues to remain a hot area. I think if TCS results are anything to go by, for the June quarter results are anything to go by, I think we probably be fair to anticipate that most tier one service providers would expect to report Gen AI related pipeline in excess of $1 billion for the next 12 months. So that's positive. So again, getting into what we want to talk about today, we want to talk a bit more about what this pricing index entails. We keep using it. We'll be using it for the next 30 minutes or so. So what does this really entail? How can you use it to understand the pricing change that we're seeing in the context of outsourcing services? We're going to talk a bit more about the historical pricing movement for the last 12 months and especially and our outlook as well for the next 12 months through this pricing index report. This report, just a heads up, this report, the next version of it will be released in August. This is a 6 monthly report which is available for download on the Everest Group website. We're going to talk a bit more about what we've heard, how other companies are using pricing index in helping them make decisions, and then we'll cover some additional pricing, solutioning, and general deal themes that we've observed in the marketplace. Um, I'm going to start by having my colleague Aman to talk a bit more about what this report is. But before that, I would also call out that we are offering a complimentary download uh, covering recent macroeconomic report. Covering recent macroeconomic trends impacting the IT BPO commercial landscape. It also covers things such as how supplier financial trends are likely to impact deal behaviors, and some anonymized examples of recent deals and strategies adopted to realize a favorable outcome. So, if you're interested, please click in the link in the chat to request a copy of the report. With that, let's get started, and invite my colleague Aman to get us started.
Thanks, Ricky. So before we deep dive into the pricing changes using the pricing index report, let me just provide a quick overview on the pricing index which was launched last year, right? So the pricing index H1 2020 report, which Ricky mentioned, which gets launched soon, right? It essentially covers three components, right? The first one is the actual historical price movements for the past 12 months. So that is the pricing index for H1 2024 will cover the average pricing for H1 2024 as compared to H1 2023. So H1 2023 is going to be indexed at 100 and it will reflect the pricing for H1 2024, right? The second thing is it will also cover the projected price movement for the next 12 months. That is that it will produce a forecasted view of the pricing index for H1 2025. And lastly, it will also cover three most important pricing themes to watch out for in the near future. So that's about the pricing index. Now, these insights that we're talking about, these would be covered across three outsourcing service categories. The first one is the IT standard services. So these include traditional IT applications such as development and maintenance on standard technologies such as Java, .NET, C, C++, and infrastructure services like services, traditional compute and storage. Then the second outsourced category we'll look at is IT advanced services. So these would include higher skilled IT application areas like DevOps, data science, full stack development, etc. And infrastructure services like cybersecurity, containers, cloud services. And finally, we have BPO services. So this would include common voice and back office BPO services, such as accounts payables, purchasing, so on and so forth. Right. The pricing index will be covered across 6 key delivery locations. That is 2 onshore locations, which would be US and UK, 2 nearshore locations, Poland and Mexico, and 2 offshore locations, which would be India and Philippines, covering across each of these service areas that we talked about. Right. I think our audience would be keen to understand some of the actual price changes here.
Yep. So we'll probably look at that in the coming few minutes as well. But Arpit, do you also want to talk a bit more about what sort of how do companies use this, and what sort of benefits are they realizing, or what's the use case for this kind of a report?
Yeah, thanks, Ricky. So, yeah, we have seen that how what are the components and the location and the service coverage which is there in our pricing index in Everest Group Pricing Index. But just wanted to detail out how the index can be used by enterprises and service providers. So it can potentially be used for a directional purpose of how the pricing has been in the last 12 months and how it will be going to behave in the next 12 months or so. So we will be giving an index on H1 2024 as well as on H1 2025. So you would understand how the pricing will go in the H1 2025. Other use case is basically to use this as an index for cola in some of the contracts when an enterprise signs any contract for what we have seen is most of the time cola has been linked to the indices such as salary indices and inflations, CPI in India. So these are basically your cost indices, but as an enterprise we would like to link it to the pricing and not the cost, right? So this is a fairly good use case for this particular pricing index. One such use case which we have seen for the enterprises is that they have used it for their strategizing their outsourcing budget for the next 12 months or so, that what is the cost is going to be in certain geographies, what are the services they want to outsource, and they can basically do their strategizing of the outsourcing budget. Service providers have used it in their 3 year strategy, 5 year strategy, with respect to how it is going to be, where their focus should be on the priorities and the focus areas. So these are some of the use cases, and we will, Ricky, show them some of the use cases which which our clients have utilized this pricing index for. Now I want to point out the details where it cannot be used, right? It can be used for directional purpose, but it cannot be used when you are doing some renegotiation for contract, or repricing of certain contracts, or renewal of the contract, because every operating environment is different, right? What we see is that a certain landscape in IT services and BPO services different. So ideally there we advise that it should be done through a benchmarking exercise, so that there could be a like to like benchmarking of how the current prices is and what the market prices are. For an example, for an enterprise, there is a pricing index which we have given for a certain country, that the prices will rise. But if you are already paying a higher price in that contract, so it is not advisable to give that higher basis what our pricing index says. So ideally, what we as Everest Group advises that benchmarking every 2 years for every strategic contract, and you should not use this price index for those purpose. So yeah, Ricky, these are some of the use cases which we provide for the Everest Group pricing index.
Absolutely, Arvind. I think just to add to it, I think I mean, I concur with that, and we continue to tell our enterprise clients really, you kind of need to establish your baseline first, right? Only once you establish your baseline, you're able to figure out as to should you go up or should you go down. For instance, I'll take an example from about a year or so ago when there was a lot of talent sort of supply crunch in the market and prices were going through the roof. And in most of the conversations, service providers had asked their clients to raise prices by upwards of 7-8% in most contracts. Now, if you just kind of follow blanket advice to say agree to that 7 to 8% because costs are going up, salaries are going up, but then in multiple contracts we realize that given that what they were already paying was very high and they were closer to the market higher end of the range, they actually did not need to agree to the entire 7-8%. They were good enough by agreeing just to a 2 to 3% increase. And there were certain clients who were actually paying quite low already. And in those situations, that 8 to 10%, even a slightly higher number, was actually warranted if they wanted to ensure that the relationship remained sustainable for both the parties. So it completely depends on what your baseline is. So 100%. I think it'll be important to look at what the actual pricing movement has been. So maybe let's talk about what the pricing changes have been over the last 12 months.
Yeah. So Ricky, in recent years, we have seen quite a topsy-turvy curve for pricing, right? And I just to set in context, in 2021, what we have seen is that the IT and BPO services demand surged, and because of that, we saw that the talent prices and the talent market was really heating up, and we saw the pricing increasing up in most of the geographies. It continued in early 2022 too, right? Uh, but with the onset of Ukraine war in the second half of 2022, the discussion and the sentiment began to shift towards stagnation and the talks of recession also. And we saw that the demand going a little down, but the service providers pipeline was really healthy at that point of time also, in their quarterly calls in second half of 2022, what we have seen. But the time to close the deals, actually, elongated. There were a lot of deals when we discussed and partnered with our clients. We saw that the time was uh, taking maybe if earlier it was taking 3 months, it was taking 4 to 5 months to close those deals. And then this trend continued in 2023, first half of 2023, where the margin pressure was there for enterprises as well as service providers. In the later half of 2023, what we saw was that there was pressure on margin, and the discussions were mainly on business critical projects, right? uh, the what we saw was that there were less discussion on discretionary projects. There were discussion on those projects which could give them the ROI as soon as possible. And that is what we saw in early 2024 as well. Now, with that context, I would like to present the Everest Group Pricing Index numbers which we saw, and which we have projected in this particular slide as well. So, as Aman told, that H1 2023 is indexed at 100. Uh, and with respect to H1 2023, we have given the numbers on H1 2024 for IT standard services, IT advanced services, and BPO for three locations. uh, I would say that IT standard services and BPO services, more or less, the numbers look really muted. In BPO's case, there are certain services where the pricing index has gone down. For an example, in USA and India, but in UK we have seen a slight surge, and that is because of the national minimum wage program which was implemented by UK in early 2024. So we are seeing that effect on the pricing in UK. If I want to continue on BPO services, mostly the contact center services pricing is seeing some pressure because of the relatively lesser demand, and because of that, the location like Philippines, which is mainly dependent on voice market of BPO, is seeing a little dip in the pricing. Similarly, for enterprise services, it looks flattish, but there are certain services like analytics based BPO services which is growing a little upwards trend. So those are certain insights in BPO services. Aman, how do you see anything out of surprise in IT standard services or IT advanced services in these
Yeah.
locations?
Yeah. So, Arpit, as you mentioned, right, for IT standard and BPO, we have seen muted changes, right? And in fact, in a lot of countries, we are seeing rate reductions for such skills, right? I remember I was recently working on a deal where there were a lot of commoditized skills in place, and there is a lot of pricing pressure on these skills, particularly, right? And enterprises, there are situations where providers have to give discounts on these skills, right? Having said that, on the IT advanced skills such as data science, cybersecurity, full stack, we are still seeing pockets of increase given the shortage of talent for such skills, right? Now, if you were to talk about the trends, the trend on the IT standard and IT advanced, it's pretty much secular across major markets like US, UK, India. But one thing I would want to highlight here is like for nearshore market like Mexico, we still see relatively better price movement on both the IT standard and IT advanced skills. Now, this could be attributed to the fact that the demand for nearshore has increased given the mandates around cost optimization, right? So enterprises are now, very comfortable in moving workloads from, onshore to more nearshore locations. So that's where the demand has gone up. Also, the FX exchange for Mexico has appreciated strongly against the dollar, right? Which is also leading to a spike in the rates. So uh, that's on the nearshore market, right? Now, in terms of the future outlook, if you look at H1 2025, we anticipate muted changes in rates, at least for standard skills. However, for advanced skills for mature geographies like UK, US, and India, we still expect the prices to increase in lieu of the demand recovery in the latter half of the next 12 months. So that's on the IT application side. Nikki, do you want to cover something on the cloud infrastructure services?
Before that, I think Aman, there was a question from the audience asking about how do we define standard versus advanced services? Can you take that up?
Sure. So when we talk about standard services, so this typically includes commoditized skill sets in the market for which there is a good amount of supply of talent, and there is stable demand for it, right? So skills such as Java, .NET, C++ on the IT application services side. Similarly, on the infrastructure services side, this would include services, additional compute, storage, right? So these are the standard skills that we are referring to. When we are talking about advanced services, these would include premium skills in the market for which there is a shortage of talent, and these are in high demand, right? So skills such as DevOps, data science, full stack development on the IT application services, and cybersecurity, containers, cloud services on the infrastructure services.
Got it. Awesome. Thanks. I think before we move forward and I talk a bit more about cybersecurity and cloud, I also want an input from the audience, and I would love to hear from what your audience thinks in terms of what are they anticipating in terms of pricing movements for IT, outsourced IT and BPO services over the next 12 months. Do you see the same view? Do you have the same view that we have at Everest Group, or do you see a slightly different? Do you have a slightly different perspective? If you can share your perspective or your point of views in the comments, that'll be very helpful. Moving on, so if we kind of talk a bit similarly and what we've seen on the cloud and cybersecurity side, I think what has happened is based on multiple studies that we end up doing and that we've done over the last few years, we've seen that cloud and cybersecurity continue to be amongst the top, say, the top one and two number one technology investment areas for most enterprises. Of course, Gen AI comes in the top five, but then cloud and cybersecurity continue to remain the number two priority areas. They kind of swap places between the two, but then they remain number one and two. Now, what has happened is this year we anticipate that it's not that investments will go down, but then we're seeing a lot of scrutiny in terms of is there enough value, or new spends are being significantly scrutinized. Let me take an example. For instance, in cybersecurity, we're seeing that in the last 2 to 3 years, we saw a lot of new investments happen, which led to sort of a proliferation of number of tools in the environment. Now, just because you invested more and have bought in a lot of tools doesn't mean automatically mean that you're secure, right? But it's really having about having the right posture, having the right integration amongst various tools, which ensures high visibility, which ensures that your security posture is up to date. So now the question is really about uh, are we getting the right value from our investment? So that naturally what is it leading to is a more scrutiny in terms of any new investment. So I think similar to what Aman said, for advanced services, on the cybersecurity side as well, we see and we do anticipate that the rate increases will happen, but it'll be very muted compared to what we saw a couple of years ago, where rates were going up in excess of 7 to 8% or 5% for most of the premium skills. Um, now I
Yes.
think go ahead, Arpit. Sorry.
Yeah. So similar to your point, new gen BPO services like marketing as a service and analytics, we have seen that the pricing trend, which is normally muted in the entire BPO sector, that there is an anomaly in those sections where new gen BPO services where the demand is up and the talent pool is not abundant. There the pricing is relatively higher as compared to your plain vanilla BPO services.
Awesome. Sounds good. Um, I think as we've spoken a lot about pricing movements, right? But then I think given the background that we come from, and it'll be probably be only half the picture if we don't talk
Yeah.
about some of the other interesting sort of commercial levers or financial engineering that we're seeing in the market, right? Because I think one thing remains paramount, and we continue to see it consistently in the market, is that cost savings is a priority for everyone that we see in the market. But then it doesn't imply that you probably go with the lowest cost vendor that you have, right? So we're seeing some multiple implications of that. We'll talk a bit more about that, but let's talk a bit more about what sort of interesting trends are we seeing in terms of how our service providers financially engineering the deals so as to be able to meet their clients objectives of cost savings. Maybe why don't we start with you, Aman?
Yeah, so I'll maybe talk about some, let's say, the top three schemes, financial engineering schemes that we are seeing, right? So, firstly, there are all kinds of discounts being offered in these, right? So, these include, relationship discounts, offshore specific volume discounts, overall book of business or slab based discounts, early payments discounts, right? So, there are these different kind of discounts being offered. Uh, in addition to that, right, in situations, let's say if there are complex system integration deals, um, there is, some of the service providers are actually providing implementation phase credit, right? Basically, a certain percentage of the design phase fee is available as a credit during the implementation phase, right? Should the buyer continue with the same service provider for the implementation, right? So that's another, incentive mechanism that service providers are doing, especially in the SIDs, right? If I were to talk about some of the other engineering mechanisms, engineering schemes, so COLA waivers, definitely, right? I mean, in multi-year contracts, we are seeing buyers asking for COLA waivers across 2 to 2 years, right? And service providers are being receptive in the interest of deal closure, right? And lastly, from let's say an integrated application outsourcing or infrastructure outsourcing deals, we are seeing service providers offering synergy discounts depending on the scope coverage, right? So there could be synergies related to, let's say, better solutioning, overall economies of scale, better pricing. Should the entire scope be given to one service provider? So we see these synergy discounts being offered by service providers. So that's on the IT applications. A bit,
Yeah,
yeah.
yeah. Such trend which we have seen is on the pricing model. So what we have seen is in BPO, the movement of pricing model from an FT or a fixed price model to uh, maybe in hybrid model, where certain part of the services are still FTE based pricing, but then certain services are at outcome based pricing, what we outcome based or output based servicing, and we have seen this mostly in those areas where output can be measured. For an example, in order to cash cycle collections, the output based pricing is very prevalent. In procurement as well, the spend optimization, percentage of spend. So there we have seen that the pricing models have evolved, and the discussions and negotiations are happening in terms of how best enterprise can leverage those outcomes, so that it really aligns with their business outcome as well in terms of the BPO contract.
Awesome. This is helpful and great to know. So what about, okay, we've spoken about the pricing index, we've spoken about the pricing trends, pricing movements, pricing outlook for 2024, sorry, for 2025. We've also spoken about some other financial engineering levers that we see providers use in their deals. Now, maybe we can talk a bit more about what have we seen in terms of how our clients using some of the pricing insights that we've provided, be it through a pricing index or some other form. Uh, let's talk a bit more about a couple of cases where we've seen how clients use these insights.
Yeah, so I'll possibly take the first one, right? So, so in one of the recent engagements, right, the enterprise wanted to understand the future price projections across multiple categories, such as applications and engineering, BPO, content services, consulting services across multiple outsourcing locations, right? So that was the scope of this engagement. Basically, Everest Group followed a three-step approach. So basically, you know, firstly we did an analysis of the historical price data along with the changes in the macroeconomic trends, right? And as part of the step, we came up with the probable list of drivers which impact the price changes, right? So wage inflation, non-wage inflation, competition, and buyer spend appetite, so on and so forth, right? Secondly, a comprehensive review of most recent rate card change requests observed across multiple engagements was conducted. And this involved contextualizing the rate cards for deal type, current position, price positioning, since the scope, right? So, for example, is the deal source, or is the deals, is it a third generation outsourcing, or I mean, is the rate card already quite competitive, right? So in those kind of accounts, what was the observed rate card change request, right? Lastly, what we did was, we did a delineation of the price change into the estimated components that we talked about, which is wage inflation, non-wage inflation, and we also provided the associated quantitative impact, right? Now, the insights that were gathered on the price prediction, right? Um, all of this insights, it provided a forward-looking analysis of pricing trends, which ultimately helped the enterprise in their forward-looking technology spending. So that's on the first case. Arpit, do you want to cover the second exam?
Yeah, so this particular case is from a global service provider. So they came to Everest Group, and they were interested to understand the pricing themes and opportunities which we normally give in our pricing index as well. So they wanted to understand it by different functions, different geographies in terms of pricing. What are the themes and opportunities we see in pricing area? Uh, uh, and they wanted to do it because of their strategy discussion, which normally happens in early part of the year, January, February. And they wanted to focus on what are the areas they should focus, and what are the themes and opportunities which they could basically leverage on certain particular products or certain functions. What we in Everest did for that particular request is we categorized each and every function and the geography as a separate category. Then we did our macroeconomic research and the geographical, functional, and the country nuances for each and every category. We found out the pricing themes and opportunities for each element, and then we provided those elements with the discussion and the analysis on all of these areas which our customer asked for. What it really did was that this service provider could actually understand the market trends and the pricing trends for the next 12 months, and uh, they could prioritize and focus on what are their areas which they could understand, and what are the areas which they should prioritize in terms of pricing. So that was one such use case which we found that service providers could leverage this Everest Group Pricing Index.
Awesome. Awesome. This is great and insight to your Arpit. Thank you so much. So moving forward now, I think as I said at the beginning of the session, I think no conversation will be complete without Jenny AI this year. So let's talk about some of the other themes which are expected to impact pricing, right? So maybe I think Aman, given your background and your experience working supporting multiple deals on the application services side, where we're seeing a disappropriate amount of impact of Gen AI, what's your take in terms of how and where is generative AI started to impact managed services deals, and what sort of impact are vendors willing to commit to and quantify as part of deal renewals or as part of new engagements?
Sure, Ricky, right. So, Gen AI is definitely a key talking point in a lot of contemporary deals. We are actually seeing prevalence or increasing prevalence of Gen AI productivity being called out in deals. So, the early signs are in terms of the productivity in managed services. It's similar to the way what we saw in automation. Back in, let's say, 2016, 2017, when it first came, right? So, in fact, in one of the recent deals that we benchmarked, we observed providers committing to an incremental productivity of around 8 to 10% for Gen AI over a 5-year deal term in managed services fees, right? Now, given the incremental productivity for Gen AI, the service provider commitments around the overall productivity, um, it has seen an increase in 2024 as compared to 2023. So, from an AMS standpoint, what we are seeing is that providers are expecting this incremental productivity to come out of an improvement in knowledge extraction and documentation generation, assisted ticket resolution, usage of Gen AI enabled chatbots. In fact, a lot of service providers are actually calling out their tools and accelerators in managed services deals, right? And apart from that, there are areas such as the ability to analyze large data sets to identify recurring issues that could cause root causes, right? um, and then emerging trends and enhanced dashboarding and communication. So that's on the IT application services. Alfred, do you want to cover some of the Gen AI related observations in BPO?
Yeah, in BPO, I mean, what we have seen is there has been clear mismatch of expectations between enterprises and the service providers, right? Uh, so most of the Gen AI use cases, the discussion was that in L1 heavy work, right, where there is voluminous work and there is a lot of transactions being happened, the Gen AI would be the first would be the area which it would impact a lot. But what we have seen is there have been a lot of proof of concepts. There have been a lot of discussions, and there have been a lot of pilots which have happened in last 12 months. But the kind of productivity which enterprises are asking for, the service providers are not being able to match those type of expectations. And what enterprises are looking at in BPO sector as of now is uh, articulate authentic numbers which is aligned to the Gen AI use cases. What are the use cases which would get which would get impacted in certain sectors like contact centers and enterprise services as well. So yeah, that's been the case in terms of BPO, that how the expectation mismatch has been happening in the last few months. And going forward, I think the discussion would more be in terms of contractual terms, how the Gen AI could be put in contract, how much benefits it could provide, and maybe the penalty and the reward basis that with respect to Gen AI productivity.
Brilliant. I think that makes a lot of sense. So let's take a question. I think that there's a question from Jay earlier, which asked about in what percentage of the deals are we seeing pricing to be a showstopper? I think so. That was a question. Yeah. So uh, just trying to share some more perspective on this. I think what has happened is over the last couple of years, all the deals that we've been advising, kind of pricing remains amongst the top two sort of criteria that clients are looking at or using to kind of evaluate service providers. Now, and that's true for transformation deals. That's true for even a managed service deal. Of course, it's going without saying it's just of course true, but we're seeing that for transformation deals as well in some cases. As I mentioned earlier, for something like cybersecurity, we're seeing a lot of value realization being very important. Same is the case with cloud transformation deals as well. But I'll be doing a disservice if I don't talk about this. That in spite of whatever we have discussed so far, low pricing is not the ultimate silver bullet to winning new deals. Now, I'll say that with the caveat. Now, we've seen multiple instances where an incumbent tier one provider has actually lost a deal to a tier two provider in spite of being the most competitive in the room. Now, the tier one provider, in spite of being competitive, they did lose the deal, not because of course in spite of being the most competitive, because they lost the deal because they were not really clear in terms of, not really, the solution wasn't aligned to what the client really needed. They were too fixated on their version of the operating model or trying to create a solution which is not aligned to them. And now multiple instances where tier 2 providers actually kind of did better than them and won those deals in spite of being slightly higher on price, because they were not focused on what SLAs and RUs. They were more keen in terms of aligning with what the client really needed, right? Not fixated about going by a particular operating model type, or not fixated by going by a particular resource unit model. So very flexible in terms of what the client really needs and putting that up front. Um, I think there's also an interesting question. What percentage of POC deals have converted to full-blown Gen AI deals? I think it'll be hard to really put a number to this, but I think we're seeing a fair number of deals moving to production. I think more than what we had anticipated earlier. I think we are pleasantly surprised by looking at that. Um, I think we kind of recently did an event on pilot to production in London, and where we talked about a lot of use cases which are moving to production. I think if you ask different people, they might have a different opinion. But yes, in some of the non-critical functions, we're definitely seeing things moving to production. For some of the more critical workloads, which impacts a wider user base in production instances, we're seeing less sort of being a more measured adoption to a journey towards Gen AI. I think that's the question on Gen AI. I think there was another interesting question uh, on outcome-based deals, right? I think, and Aman, I think given your background, what has been the
Yeah.
feedback from clients on outcome-based models signed in the last couple of years?
So I think enterprises, I mean, in terms of the execution of outcomes, I mean, it's hard, kind of commit to outcomes, right? So we are seeing, interest in terms of, you know, outcomes being called out, right? But how do you really contract for those outcomes, and how do you quantify, those outcomes in actual deals is, really from a contracting standpoint, that is a bit
Big
of a pain
challenge.
point. But in terms of the outcomes, we are seeing multiple scenarios where outcomes being called out. So let's say from a transformation perspective, right? Some of the outcomes that providers talk about is, so let's say if a service provider is doing an SAP S/4HANA transformation, a greenfield implementation for a client, right? So the outcome in that case could be, a part of the fees could be fixed, but let's say 20-25% of fees could be related to outcomes, and those outcomes could be, let's say, how much of the implementation is aligned to the standard SAP functionality, right? What is the CSAT score for that, right? So those outcomes are, I mean, these are the outcomes that we have seen service providers committing to, and there is definitely an upside to it if service providers are able to exceed or achieve the outcomes, right? So let's say if they are able to exceed the outcomes, there is a situation where they get 2x of the revenue of the proposed outcome fee, right? Having said that, all of this is happening in a hybrid mode, right? So as I mentioned earlier, 75 to 80% of the fees is still linked to some sort of a traditional fixed fee model, which would be invoiced monthly, but remaining 20-25 would be linked on outcomes.
Got it. I think I wouldn't call it a pipe dream, but then, Aman, would it be fair to say that the number of instances we are seeing outcome-based engagement being called out at a proposal stage versus what is really getting contracted or getting executed is kind of a funnel, right? So I'd say if
Yeah,
it starts at
absolutely.
80-90%, the actual number of deals getting contracted or outcome might just be under 10 or 15%.
Absolutely. Right. I mean, at the proposal stage, yes. I mean, that is definitely on the rise. I mean, if I were to talk about, let's say, from over the past 3 to 4 years, definitely the rise in terms of the outcome-based deals, we have seen an increase, right? Providers are, enterprises are looking at, alternate forms of models, moving away from D&M and fixed fee to more alternate models like output or outcome-based, and definitely this has certainly increased. But at an overall by outcomes, I mean, in terms of the contracting, I would still say that's uh, very less, right? I mean,
Got
still
it.
a lot of contracting is being done in the fixed fee manner only.
Got it.
One point on the feedback of outcome based pricing from service providers is expectation matching while doing the contracting, right? So what we have seen is if it is an RU based pricing, and there are certain volumes which are provided for the past 12 months, or the annual volume which is provided, if the expectation matching is correct, and the volume flow is ex- um, matched correctly between the service provider and the enterprise, then I think the expectations and the feedback remains that it is positive for the enterprises. But for those instances where there is some opacity with respect to the volumes, and the clear expectations are not managed, we have seen that service providers have not been able to staff those many resources for those volumes. So
Yeah.
it is basically alignment of your expectations with respect to the volumes at the start of the contract itself, so that you don't have face those
Yeah.
concerns in the coming years.
Think there's let's take this question from Amar Singh Thakur, which says that what are some of the transformation outcome examples for BPO services? I think I'll take this opportunity to talk a bit more about our what we so within BPO talk a bit more about HR. So, for instance, I think within HR would be fair to say that nearly 45 to 50% deals that we see in the market are based on output-based metrics such as price per employee or price per user, and the rest are kind of a mix of time and material, and probably under 15% would be outcome based deals. And when I say outcome based deals, typically the metrics that we seeing the market use in terms of outcome metrics would be things such as payroll accuracy or cost per hire or time to competency or time to fill, time to hire, things such as percentage of self-service adoption for HR help desk,
Yeah.
things such as employee satisfaction score for the overall HR outsourcing area, the quality of hire, especially when it comes to talent acquisition, the overall compliance adherence when it comes to overall HR outsourcing again, the overall NPS score when it comes to recruitment or talent acquisition again. the overall employee benefits cost reduction when it comes to governance, when it comes to learning things such as workforce productivity improvement. So those are the metrics that we definitely see, outcome-based metrics that are getting talked about and contracted for in certain deals when it comes to outcome-based deals.
Yeah, in finance and accounting, we see it majorly used in order to cash as a part tower. Similarly, you talked about payroll activities per employee per year or per employee per month is an instance which is regularly being used by the enterprises like ADP, Elite, and the payroll organizations. So those are some of the examples in enterprise services as well.
Correct. And I think, Arpit, I'm not sure if we can take this and if you have any inputs on this. So let's take this question from Sanjeev, who's asking if we are seeing any Gen AI productivity commitments being made by providers in CX deals. And is there a differentiation between low versus high complexity and transaction processing versus voice or contact center? So um, and then finally, what technologies are providers looking to be able to make such commitments, or is it too early to talk about this?
Yeah, so yeah, this is a very relevant question and very and we have seen this questions being asked by our clients as well in terms of Gen AI productivity. So what we are normally seeing is it depends on the kind of maturity of the environment also. For all the automation tools, we see that the landscape which the enterprise has, if it is a first generation outsourcer, second generation outsourcer, or third generation outsourcer, the landscape could differ for all the automation areas. So it is similar for Gen AI as well. So there could be a lot of use cases where there would be an overlap between a Gen AI automation use case and a normal automation use case as well. But what we have seen is the productivity index just uh, from the Gen AI is approximately 10 to 15% additional Gen AI productivity in customer experience for the tra- uh, low complexity transactional process L1 level voluminous work. So yeah, that's the percentage which we are seeing in customer experience space, Ricky.
I think that's brilliant. Um, I think that would be it in terms of the questions that we can possibly take for today's session. Finally, I think I'd like to ask Aman and Arpit any one final input that you want to share, anything any interesting tidbits that you've seen in the market that you want to share with the attendees today.
Yeah, sure. I think I would like to talk about GCCs, right? It's an interesting space, and we are seeing an increased activity among mid-size and large enterprises to explore the build, operate, transfer model or assisted captive route in order to set up captive centers in low-cost locations, like offshore or nearshore locations, right? Now, this has benefits in terms of the better setup or delivery risk management and access to a range of SMEs. Also, what we see that in terms of selecting suppliers for the BOT model, the enterprises have a different set of considerations, right, in comparison to standard outsource or managed services, right? And what we are seeing is many a times service providers lose out on bids as they are using the same messaging, as a standard deal pitch, right? So yeah, it's an interesting space. We anticipate that this is going to go up given the mandates around cost optimization, right? So yeah, something to look out for the future.
Thanks, Aman.
Uh, yeah, one particular trend which I would like to highlight here is the entry of Big Four in the BPO services. So normally BPO services are considered as a traditional low margin work, and Big Four services are. But we have seen that, in fact, one such data point I would like to highlight here is Big Four is going to hire 10 to 15% more uh, resources or FTEs in non-voice BPO work in India. So that actually substantiates the point that they are going into BPO managed services sector, not essentially your voice operations, but non-voice. high complex judgmental work where which could essentially complement their already existing professional services tax and audit system. So in finance and accounting, essentially we have seen that big fours vying for a FP&A kind of work, and the general accounting work, which is a little bit more complex, and little more judgment is required. So they essentially want to diversify their revenue stream, and they are looking to enter into BPO services as well.
Awesome. Thanks, Arpit and Aman. I think there's one question that we can possibly take is, does strong relationship with the client really give an advantage in terms of understanding the pricing related decisions, which in turn help vendors in winning such deals? I think I would say yes and no, both. We've seen multiple instances where and having a very strong understanding of the sort of the client requirement, which in turn meant being very close to what the client really needed, actually helped the kind of worked as an advantage to the provider. And obviously, there are certain markets around the world, right, where relationships are highly valued. For instance, we've seen that in Canada specifically, not so much in the US, but in Canada, existing relationships are very valued. So, typically, a preference is given to someone who you've worked with, who you know, rather than trying to work with someone new. But for someone in the North America market, for in the US, and we've seen that providers sometimes not actually using that to their advantage. As I mentioned an example earlier, where we've seen multiple instances where the incumbent provider actually lost a deal in spite of being an incumbent and being the closest possible to understanding what the client really needed, and they did not use it well. They kind of pushed their version of the operating model, trying to sell their IP or trying to push their automation capabilities rather than trying to really do what the client really needed. But to answer your question, yes, definitely a strong relationship, but then using that relationship to your advantage, understanding what the client really needs, that's actually the winning combination. Final question, I think, from Karthik, which who asks us about, does Gen AI help businesses balance short-term pricing tactics with long-term strategic goals? I I'd say I think at this point in time, I mean, does Gen AI have immediate implication on the pricing? What we are starting to see, and I mean, Aman and Arpit, feel free to chime into this. That what we're seeing is that at this stage, it's still very early for vendors. Vendors are definitely committing when it comes to Gen AI, right? Everybody is willing to commit to certain productivity improvements or pricing of reductions, but then they're typically doing it in the out years of the contract. They're not doing it immediately in the year one or year two of a deal, because they're getting into, there's too much unknown, right? Once you get into a new organization or just getting in even an incumbent situation. So what they're committing to is typically in the out years, year four, year five, they're typically committing to an additional incremental productivity benefit. Arpit mentioned, alluded to it, an additional 8 to 10%. I think that we've kind of seen that very commonly towards year two, year three to year five. So if you call that as short-term pricing statics with long, I think for any organization, long-term goal would be to actually have a very efficient base of operation. So will Gen AI, I mean, and we kind of are missing the overall theme if we just focus on Gen AI as an enabler to reduce cost, because it's much more than that. It helps improve efficiency in significantly meaningful ways, which you can't imagine before. So I think that's the overall long-term objective that every organization should be aiming for, right? So does Gen AI help you achieve that? Definitely, by all means. Um, so Aman, Arpit, anything that you want to add to this?
I would agree, Ricky. I mean, it's too early to say, right? I mean, providers are talking about the productivity, but I think providers are also in an exploratory phase right now, right? Would they be able to achieve more productivity or less productivity? But that's what the commitment that providers are talking about. I
Yeah,
mean, on the apps and BPO services.
got it.
In fact, business case also should stack up with respect to the cost of technology versus the kind of productivity and the savings which brings in from the Gen AI.
Awesome. All right. Thank you so much. I think with that, we've come to the end of today's session. I would really like to thank everyone who participated, asked us
Yeah.
questions, shared their inputs, and joined today's session. As a reminder, again, we are offering a complimentary download of a report which offers some insights in terms of deal behavior, some interesting deal examples, and some financial analysis of certain vendors based on the financial reports. Please click the link in the comments to request a download of that report, and somebody will be in touch after that. Thank you once again for joining us for today's session, and have a great rest of the day ahead.
Thank you, everyone.
Thanks, everyone.